Hey, VV Nation, I never thought I would say this. I am fed up with the market. I'm tired of trying to make heads or tails of what's going on. The Fed is hawkish. The Fed is dovish. The Fed's going to raise rates. The Fed's not going to raise rates. The economy sucks, but the economy is getting better. I'm losing on my trades. VectorVest was late to the party trying to tell me what to do. I didn't see any of this coming, and I'm just done. I'm just done. And I sit back and go, wait a minute. I have access to a tool called VectorVest. We give you access to what the power behind the software can do to help you to make those decisions. So when you sit back and you say to yourself, I'm done with the market, I can't understand it, I'm here to tell you that you can. I'm here to tell you that we have a tool to help you to keep you on the right side of the market. We will keep you ahead of the curve, and we've done it time and time. We've been doing it for over 30 years. For everyone out there who's fed up with the market right now, you're in the right place at the right time. Let's get into the software. Let me show you what I mean. Here's our home page. Looking at the color guard, red, a lot of red. What does a red light mean when you're on the road? It means stop. This is telling you that you should stop trading long. You should be either playing the market to the downside, sitting on the sidelines, playing options, whatever it takes. Whatever it takes. That's what the guidance is showing. Color guard right now is somewhat bearish. VectorVest does not advocate buying stocks at this time. Everything is hitting you right in the face as soon as you open up the software. So let's take this a step further. Let's go to the market timing graph. Here's our market timing graph. This is looking at the movement of over 9,000 stocks. We feel that it is a better representation of the broad market move. How is VectorVest right on point to help you? Well, the market was going higher and higher and higher. We hit a July high on July 31st, but we had an indicator, MTI or market timing indicator, which was telling you right now, this is the time to be careful and not to get yourself in a big situation where you'd lose big stocks and have a car crash. Right? In this time, a lot of people were talking about, well, I'm in SMCI, the stock's been rocking, it's been in your best stock. What do I do? Well, we put a video out that talked about specifically in the case of SMCI, some techniques to know how to take some of that off the table or pull this trade off altogether. It's here on the channel. So I'm looking at coming off a July high, the 3 and 8 exponential moving averages crossed on 8.2. Not only that, our fastest market timing indicator issued a red light showing that the primary wave was down. Look at where that was. 2 days off the top of the market. I don't know who else out there is getting you out of the market that early. I just look at that and I sit back and say, what more could we have done as a company to get you out of your high flying stocks faster or get you on the right side of the market while all of this was going on? If you can show me something in the chat that we could have done better, I would love to look at it. How many of you right now are in the situation where you're in your high flying stocks, you're still holding them and wondering what to do? Type of me in the room. Some of you may be brand new to the channel, just finding out what's going on and like, I don't know what to do. Well, from that perspective of not knowing what to do, I'm going to give you some great information, or I'm going to try to. Now, someone asked me recently, how low can the market go? Well, you see these levels of support? Those are psychological levels where buyers should start looking to get back into stocks. Notice that we fell through 2 levels of support. Currently, today, as I record this video, we're closing further below the most recent level of support. So how low could the market go right now? I've got another level of support sitting at about $57.16. And that level of support hold? Well, how about looking at the indicator, the MTI, because people are asking me, is this a buying opportunity? Well, we have that same indicator that lets you know when the market is looking toppy. Same indicator can let you know when the market is looking for a bottom. When the MTI gets to a level of 0.60, not there yet, at 0.81. When the MTI gets to a level of 0.60, the market is starting to look for a bottom. That's an opportunity where you start to get your shopping list ready. Not telling me that yet. It's telling me actually the market still has more room to fall to the downside, because the MTI is not there. And that's it in a nutshell. The buy to sell ratio lets me know when the market is looking for a bottom. When the buy to sell ratio gets to a level of 0.20, the market is looking for a bottom. Put those two together, letting the market come to you will present you with some of the greatest buying opportunities as after a market has stopped falling. So for those of you who are like, well, this is a buying opportunity, I'm going to buy now, there's nothing telling me that you can do that yet. Let the market come to you. You can try to will it as much as you want. The market don't care. The market don't love you. The market don't care what you're thinking. Follow the trail that the market is leading for you. I'm a former Marine. In order for me to get from point A to point B, give me a map and a compass, I can navigate from point A to point B. The VectorVest composite is doing the same thing for you, navigating from losses to wins and doing it over and over again. Now, a lot of you out there may be saying that we're just self-promoting the software. No, I'm not. I'm showing you the guidance. I'm showing you the data. That's what I'm doing. Whether you take it or not, it's up to you. But I'm showing it to you so that you can visually see it. Let's take this a step further. Let's go to the views. Let's go look at the guidance starting from Monday. This is a market recap for the week, right? Let's see what we were saying along the week. Monday, 8:14. A lot of red, couple of yellows, primary wave down, underlying trend of the market sitting right at 1. But what did we say? Prudent investors should not buy stocks at this time. Aggressive investors and traders should play the market as it develops with what? A bias to the downside. Let's go to the next day, Tuesday, 15th. Chinese economic concerns weighed on the U.S. markets. All right, now 3 more red lights. Underlying trend of the market went down. More confirmation of the market pushing low. Guidance. Prudent investors should not buy stocks at this time. Aggressive investors and traders should play the market with what? A bias to the downside. Now, as these days were going on, we saw euphoria kick in. Markets moved up in the morning, but then closed lower by the end of the day. And a lot of you who have your heads on the swivel, a lot of you who are thinking that this is a great buying opportunity, try to take advantage of those up days where the market pulled back and you find yourself in the same situation you are in. You're not making money. Let's go up to the next day. It would have been the 16th. What was the headlines? Hawkish Fed minutes. That's right. The Fed minutes came out, sent Wall Street lower. So now you sit back and go, what is the Fed going to do? The Fed's going to raise interest rates at least one more time this year. What does that do? That shrinks the economy. What does that do? That takes people out of the market. What does that do? That helps the market to go down lower. What does that do? More and more people are starting to put money in the bank where they're getting a higher interest rate. All of these things are going to affect the market adversely. Thus showing that I think that the market does still have more downside, but we'll see. I'm going to still take what the market gives me. All right, so as I record this video, prudent investors should not buy stock. The guidance is right on point with what's going on with the market timing graph. For you, anybody to say that we came late to the party, we were 2 days off of the top. For those of you who said, I didn't see this coming, the guidance pointed you in that direction to keep you on the trail, to navigate you to the point of profits instead of losses. All right, so with all of that being said, let me prepare you going into the next week with some stock picks that I've got for you. Go to the Viewers tab. From the Viewers tab, I've got 5 picks that I want you to keep your eyes on. Home builders, rocking and rolling. Why? Because inventory of homes are low. Nobody wants to sell a home to get into a higher mortgage rate, especially if they're locked in at low mortgage rates already. ITB, ETF. This helps to keep me from trying to push you into an individual stock by taking advantage of a group of stocks. Oil. Oil is on the rise. Hurricane season is coming. The strategic petroleum reserves are low. It's going to be an issue if something bad happens to one of the rigs due to a hurricane. Oil demand is there. Supply is low. Keep your eye on oil. Tesla, bearish on Tesla short term. Why? They're cutting prices in China to compete with China EV sales. It's going to hurt the bottom line. You did once before. It's going to do it again. So I've got a bearish ETF on Tesla itself, the SLQ. Next, Apple Apple's about to come out with their new iPhone 15. Am I going to buy it? Probably. That's exactly what I'm going to do. Do I need to? No, but I will. All right. Historically, prior to a product release, Apple takes off. I've got an ETF for it as well, AAPB. Semis are getting beaten up, SMCI. Those of you still holding SMCI again, I did a video that showed you how to take some of those profits off the table. Semis are getting beaten up for a little bit. I think it's healthy, all right, because they were on the rise. AI was pushing them higher. I think it's healthy, but I'm going to play that SOXS, the contra for the semiconductor. These are my 5 picks for you going into the next week based upon information that we saw from the guidance that we give. This is not, well, Glenn thinks that I'm just a guy. Don't just listen to me. Listen to the software. You don't come to see me. You come to see what the software has to offer. All I want to do is point out what you need to see. And folks, if you like this content, make sure you hit the like button. This is what we do day in and day out. Make sure you go to the channel, look through a lot of the other content that we have. We strive very hard to provide you with some of the best content on the YouTube channel, and it comes down to investing in the stock market. If you're brand new to the channel, hit the subscribe button, the bell icon, so that you'll be alerted to when new videos like this come. Folks, it's all because of you that we grow, but you need to share this information so that other people know what we're doing here at VectorVest. You know why? Because we do the work, you reap the rewards. And if you've been reaping some rewards from our channel, type rewards in the chat for me. All right? Let me know that for many of you, VectorVest is working out well. Type rewards in there. And for all of you people who are not subscribers to the channel, I want you to see how many people type reward. All right? That may be the straw that breaks the camel's back to get you on board with VV Nation. All right, folks, this video is over. Till the next time, see ya. Hey, VV Nation, you know that we can analyze any stock in a matter of seconds. Do you want to analyze any of your stocks for free? You want VectorVest to tell you what you really need to know about that stock? Well, you can. If you go to www.vectorvest.com/YTFSA, you can get a free stock analysis on any stock that you're currently holding or are possibly looking at. Folks, what do you have to lose? Do that now and analyze any of your stocks in a matter of seconds.